At a time of record low interest rates, Parliament and many critics are now asking why our banks continue to gouge the nation with their extraordinary interest rates on credit cards. The Reserve Bank went to Canberra today admitting it can't explain the record gap between the rates it sets and the rates we have to pay.
Credit cards? No. Critics say they're trick cards, used to pull off the greatest bank robbery of them all.
Are Australian consumers being ripped off?
Where the banks rob customers of billions in interest.
When the price of borrowing money keeps getting cheaper, why aren't credit cards getting any cheaper?
We think that there is some gouging going on in this space, absolutely.
8 million Australians own credit cards. Between us, we've stacked on our plastic a debt almost double the entire defence budget. Government figures show we pay approaching $800 interest a year per card. That's at rates between 13.5% and 20%. How much less would credit hurt if those rates had fallen like the official rate?
It's getting very, very difficult to justify that gap.
It's always been a wide gap and it's now as wide as it's ever been.
The very people who've been pulling down official interest rates for 4 years now admit they have no clue why card rates are so sticky.
Well, to me, the gap seems high and it's hard to explain why it's as large as it is.
We asked the Bankers Association to explain. It declined an interview, but did release a short debt discussion paper today. It says our overdue credit card debt has actually been falling for 3 years, so the amount of interest we're paying is going down, even if our interest rates are not. As well, the association says credit cards carry risk for banks and come with features that cost.
And we need to, be prepared to walk with our feet if we are being ripped off.
And try to find plastic rates that aren't stuck quite so high. Tim Lester, 7 News.